It's Tuesday, the 13th of March 2012, and in this Boardroom Talk special podcast, Johan Vorster, the Chief Executive of Clover, joins us now. Johan, these are results for the 6 months to the end of December. Lots to talk about there, but let's just give by way of background. You provide milk, cheese, and butter. You buy 680 million litres of milk every year, or so you intend to do this year. You process them. You don't want to sell commoditized products. You like to put it into branded products, and you've been far along the way of achieving that. And I guess one starts off by looking at your results and asking, how is it going with the supply of milk from the farmers? Last time we spoke here in September, you were telling us how there were 3,200 farmers 10 years ago. That's down to 270. Is that still reducing?
Well, Alex, no, it's not reducing anymore. I think it's stabilized. It is a worldwide trend to consolidate on the farms. It gives them the necessary economies of scale. And once they have that, they can invest into much bigger technology to make it even more worth their while.
Are these farmers mainly selling to you, or do they have other outlets?
They're mainly selling to us. Because of our quota system, it's very sought after. So then they have a right in perpetuity to supply us with milk. So they're very loyal farmers. We had them for many, many years. And the sons are coming into the business now as well. So becoming very sophisticated.
And the prices that they receive from you, being almost a sole buyer, I suppose you can set the prices.
It's all market related. If you don't pay enough, they will supply to somebody else. So there's pretty much market forces out there that forces you to pay the prices that's out in the market. But having said that, I must immediately say they were under pressure last year. I've mentioned it in my report as well. We couldn't increase the prices towards the end of last year because of the high season of milk, the high flow months. But we have increased it subsequently to that with about 60 cents, just over 60 cents, which is about 20%. So I think that that will alleviate a lot of the cost pressures that they've had previously.
You talk about cost pressures. They must be enormous. You've got feed pressures. We hear from the people like Astral Foods and Rainbow how the feed prices are going up for them, and I'm sure it's the same with the cows. Also, we know electricity prices have been rising sharply. Okay, they haven't put it up another 25% this year, but 16% is already on a high base. Is tough. Is that 20% you give to farmers sufficient to keep them in business?
We monitor it on a daily basis. The maize prices and specifically the fuel prices has got a big effect on them. We monitor it. The level that we're up to now is just to cover those cost increases to them that they've had. It will not stimulate milk. So what we have to wait and see is what happens with the maize prices after this season. Towards June, July, it seems as if the prices are stabilizing. But if it's necessary, we will increase the prices again.
Are you able to then get all of the 680 million litres that you need this year?
This year we might be a bit short. We aim to import UHT and powders originally for our Cielo Blue project, which we will still do. But if we're short, in other words, if this 60 cents will not stimulate enough milk, we will have to import temporarily some powder for the season, for the low season. But
have you done that before?
We've done that before, yeah.
How long ago did you, or when last did you import?
The last time was 2007, but it's very little in compared to our total. It's less than 2% of our total milk source that we would import. And it's just the lead and lag that we have to make up between when you stimulate the milk and when it actually comes.
So when you stimulate the milk, you pay a little bit more, and then farmers would presumably invest more in their cows.
They would retain their heifers so that they have more milk for the next season. So if you pay them too late, then they don't have time for that. They don't have an opportunity. But we think this time the whole industry have reacted more impromptu and in order to stimulate that milk. So we started in January already, January, February, March, 3 increases, and we hope to see the benefits by August, September.
So as far as the farmers are concerned, and anybody who is related in some way to dairy farming will be watching your results very carefully. Your revenues are up 7% in this year, in this first 6 months of this financial year, 6% last year. That's not really gangbusters. Can you up that at all?
We can, but you've got to look at it in the context of the product mix, because we've increased over 7% volumes only in milk, 9% in beverages, but we decreased our concentrated products, the powders and the cheeses. And that is in line with our longer term strategy, where we want to exit bulk products and increase our value added products. So if you look at the results per category, it's actually a very good growth.
So your strategy is on track?
strategy is on track, yes.
You did, it was interesting going through again our discussion last time at where you're number one and number two. And one of the points you made was you're number two in iced tea in South Africa. Now, iced tea has got no milk in it,
Yes.
certainly no butter and cheese either, and also water that you're moving into. Is this expanding out of the core base?
Milk is still a very important carrier for us because that enables us to deliver on a daily basis to these shops. So that actually, milk gives us the competitive advantage with our distribution network. Also with merchandisers in the stores, you've got them, then you create almost a pool through the system. So we concentrate on our milk market, but also we want to expand our value-added products like Tropica, juices, water, iced tea. So iced tea we seesaw, then we number one, then we number two against Lipton's, but we want to increase our value of the value-added products. Currently it's about 20% of our total turnover.
How much further would you go outside of iced tea and water into non-milk products?
As far as our platforms will allow us, it's very important to stay on the same platform, a technical platform. So, and we haven't had access to capital previously. Now that we've got access to capital, we're already expanding our civils. New platforms are starting to be introduced as we speak with Cielo Blue. Once that's in, we can go much further than just milk. But milk will always be the number one asset that we will, because of the ability for it to absorb all the costs to get to the end consumer.
You mentioned Cielo Blue a couple of times. That's the relocation of plants from the Highveld to the coast, effectively Port Elizabeth and Pinetown. Just refresh our memories why this was necessary and what the advantages are.
Cielo Blue is basically distribution, capacity expansion, which we were full, and then the production side, where previously Clover could not, prior to 1994, Clover could not do business in the south. We were limited to the north by means of the marketing board. As a result thereof, all our factories are in the north, but the milk has migrated from the Highveld to the coastal areas where it's cheaper to produce. So we are at the disadvantage that we have to drive all our milk up from the coastal areas to our factories in the north, which is at a huge cost. By moving those machines down to the coast, you are then in the source, and then you don't have to drive a chilled product up to the market. You can then drive either concentrated products or long life UHT products up to the market where you have a return leg back of some sort to cover that cost. So it's very expensive to drive raw milk to your factories. It's cheaper to relocate your factories to where the source is.
To transport the value-added product, as it were.
Correct.
What I was thinking about, again, before this discussion was, once Cielo Blue is in place, and you did say it's going to take probably another 2 years, once it's there, what is the impact? What is that kind of impact going to have on your cost of production?
We have two type of projects. We've got Cielo Blue of 270 million. Then we've also got an additional 350 million that was approved by the board in over and above just the movement of machineries. Additional projects such as sliced cheeses, new platforms, carbonated soft drinks, etc. The impact of just the Cielo Blue part will be about 99 million per annum EBITDA cost savings, which would push up our return on equity quite substantially, as well as our operating margin closer to where our peers are operating.
You said carbonated drinks?
Yes, we've got some interesting ideas on the fruit juice business, how to carbonate that, which will lead to a much more healthy carbonated drink than what's currently available.
Take on Coca-Cola, but with apple juice,
we
perhaps.
Wouldn't do that. No.
What kind of fruit juices?
We've got our Tropica range, which is very popular.
But would you carbonate your Tropica range?
We could, yes.
You could?
I don't want to give you all the secrets.
Okay.
It's all in the pipeline.
I won't ask you anymore. Your shareholders would be cross if you did, and the competitors came out. Talking about your shareholders, the share price has done pretty well. 6 months ago, you were bumping along around 11 Rand, which is virtually where you were since listing in December last year. Mm-hmm. But it's gone strong in the last little while, almost 13 Rand a share right now. Why do you think the market's paying attention all of a sudden?
I think it's still a bit of a wait and see from the investors. There's a lot of value that we can still add. The capital projects are only coming into play now. We always said it will take 2 to 3 years because of the nature of our product. But I think we're close to that period now. And I think the investors want to get in there. So we've had very positive response from our investors and even from Fidelity, our international investor.
It's also interesting to see that you've jacked up your dividend. You're paying as much at the half-year stage this year as you did at the final stage last year. Does that suggest paying 15 cents now Your total payout last year was 25 cents. Does that suggest you're going to have another big hike, or projecting another big hike for the second 6 months?
We would like to pay consistently close to what our policy is of 25%. But remember, this time of the year, there's a tax arbitrage available that we are using. By paying it now, there is a change in the tax legislation. So I would say it's probably a little bit more than what it normally would have been.
So you did pay attention to the budget speech?
Yes, we did.
And looking ahead, as far as the operations are concerned, again, 6 months ago, you said a challenge would be to try and find ways of passing on the input cost increases from your perspective. Have you been successful in that?
Yeah, we just to go back to the results, the first quarter was quite tough. The second quarter was more lenient to us. We couldn't increase the prices, so we had cost pressures which we had to absorb, which we did to a large extent. We couldn't give relief to the producers, as I mentioned, and then we increased our prices on the 1st of February and the 5th of March. And we have been very successful with that. We haven't seen a drop in volumes. So that bodes well for us. And that's the reason why we want to be in brands, because brands are normally more resilient against these increasing prices. So going ahead, we feel that we will have a strong second half as we've had in the last quarter of the first half.
And with the imports out of the way this year, 2012, and hopefully the milk being stimulated, locally produced next year, what would you be looking at your total demand from the dairy farmers in 2013?
It's again depending on the product mix. As the mix improves, we drop the bulk products and we increase more on the branded products. So it'll be around about the 680 million level again.
So the same level.
But it will grow in the right product areas in the mix that we wanted to grow into.
So for dairy farmers, they shouldn't really be looking to increase their herds by too much in the near term. But hopefully, as your ideas take hold, your demand will increase as well.
Our own personal farmers have a lot to look forward to, as we have our quota and then we have contract producers. We have given those contract producers notice, some of them, and that growth will then be absorbed by our own quota farmers. So our farmers will get all the growth that they can offer us. So that's how we balance it. We've got our own farmers and then we've got contract farmers. And every year we cancel some of our contract farmers, those who do not have long-term contracts, and we give that growth opportunity to our personal, let's call it, quota holders.
Just to close off with, you mentioned that you've got some exciting plans on the branded products. When will those start being seen by the public? The frustrating part is that the civils have only just been completed. Civils?
The civils in all the areas that we want to expand, because we had no
civil
capacity.
contracting, in other words,
around
the factories. Mm-hmm.
And it's only now that we can start ordering machines for the new products, and we will start to release them as the machines arrive. So we've got some interesting plans there that will communicate to the market closer to the time.
So you bring machines from other parts of the world, put them into your factory, and then roll out whatever the product range would be.
Yes, that's correct.
And those 14,000 outlets, you did say that you were going to be looking at your supply chain and trying to sharpen that up a little. Have you made much progress?
Yes, we have. We have increased the capacity in Clover, which means that we're now using that as a mothership, that we only have to ship it to smaller branches or satellites. So there's already been savings in that regard. So we're working constantly on reducing that cost of the supply chain.
Your headline earnings per share were down in this period because of a dilutionary effect in the shares. When do you feel you'll be in a position to actually grow headline earnings per share?
It will grow next year, because the shares were only issued on the 14th of December in the previous year, so they were only in for half of them, the 6 months. So next year will be a normal month. So you'll still see one dilution effect in the end of this year, but from next year you will see the full results coming through.
Johan Vorster is the Chief Executive of Clover.